Hello, my name is Sean Weiner. I am currently a graduating law student and somebody that has been an executive in the banking and finance industry for the last 13 years. As part of my role in the banking industry, I have had the opportunity to help many middle-class clients prepare for their retirement and then plan for their subsequent death. The major concern of my clients was the requirement to pay the estate tax, also referred to as the death tax. Let me first explain what the death tax is and give some history about why this tax has become an important issue. The death tax is a tax that is required to be paid to the government upon the death of a person who has assets in excess of $650,000. The government adds up all the person's assets, including cash, stock, retirement accounts, business accounts, and real property, in figuring a person's total estate assets. If the estate totals more than $650,000 in total assets, the estate, and more importantly, their heirs to the estate, are required to pay between 45 and 50% of the total assets to the government. In 2001, Congress passed the Economic Growth and Tax Relief Act. Congress implemented a temporary phased elimination of the death tax, which completely eliminated the death tax in 2010. Since the tax elimination is only temporary, the death tax rolls back to the 2001 levels in 2011. In 2007, Congress introduced legislation to make the elimination of the death tax permanent. But this legislation has not yet made its way out of the Ways and Means Committee and has never been voted on by the entire House. During the recent political campaign season, many promises were made to the American people. And, of course, the fulfillment of these promises comes with a hefty price tag. As part of many of the campaigns, the primary source of funding has been to repeal the tax cuts that were part of the 2001 Economic Growth and Tax Relief Act. This means that, without your help, in 2011, the death tax will be reinstated. There are many problems with this tax. First, if the majority of the estate consists mostly of property and not cash or cash equivalent, the heirs of the estate must start selling the property that they just inherited in order to pay the government. Let me give you an example. Let's say that your father just passed away and you are heir to your father's estate. The father's estate consisted of 1. The family home that has been in the family for 30 years that has appreciation to the value of $750,000. 2. A rental property that is valued at $250,000. And 3. $50,000 worth of cash. You would be required to pay at least $472,500 in taxes. The obvious problem occurs that the estate only left you $50,000 in cash. Therefore, you are required to pay more than $422,000 in cash to the government. Since it is unlikely that you have the required amount of cash to pay the government, you have to start selling property in order to pay this tax. In the before described scenario, the only option for you is to sell the house that has been in your family for the last 30 years. Not only would this tax be a financial nightmare for you, but it will also be an emotional nightmare. Imagine speaking with your parents about their plans for when they die. They promise you the family house. You plan on living in the family house after they pass, but when you are ready to move into the house you have been waiting for, the only thing that has gotten you through the tough time of losing your father, you learn that you have to sell the house because the government needs to be paid yet another tax. The second problem that arises from the death tax is that the tax is a form of double taxation. During a person's life, they are required to pay taxes. A person is required to pay taxes on their income from work. A person is required to pay capital gains taxes on their stocks and investments. If a person is required to pay taxes on their assets when they die, they are paying taxes for the second time on the same money. And if a sale is required of some assets, a person will be required to pay taxes a third time, or, in some instances, a fourth time, on the exact same money that they had already paid taxes on. Let me give a clear example of how this works. You are required to pay the death tax based on your total assets. You buy a home in the amount of $50,000. $35,000 of that came from what you were able to save working as a manager in a retail store. $15,000 came from gains on a stock investment that you made 15 years ago. You're required to pay income tax in the 28% tax bracket when you first earn the $35,000 of income. Then, you're required to pay 15% capital gains tax on the $15,000 from the investment account. Because your estate qualifies for the death tax, your heir must pay when you die. Your heir doesn't have the cash, so he must sell this house. Since the home has appreciated, your heir is then required to pay capital gains taxes on the sale of this house. And if you live in Florida, your heir is required to pay state documentary stamps on the sale of this home. So, after paying taxes on your income and taxes on the capital gains to buy your house, and then paying capital gains and state taxes on the sale of this house by your heirs, they are now required to pay the death tax. So, in essence, you are taxed 4 times solely because of this death tax. It is time that we all get involved. We need to let our Congress folks know that we do not want to pay taxes just because we die. We do not want to be taxed 2, 3, or 4 times on the same money. We want to be able to inherit family heirlooms and not be required to sell them upon inheriting them. We want to be able to leave property to our family. We do not want to be required to sell family property and businesses upon our death. In 2007, Congress introduced a law to make the death tax elimination permanent. We need to let our representatives know that we support this bill and we support this going into law. I encourage you to go to my website and take action. On my website, there are links to tools that will allow you to write a letter to your congressperson. You can either print the letter or automatically send the letter by email. Go to www.nomoredeathtax.info. Once again, go to www.nomoredeathtax.info. Thank you.